let's say over the last 5 years or so, have there been any pretty substantial changes or evolutions in the crypto world that have that you've been able to see more clearly than others? Like, is there something that I'm also asking for, like the audience who may be thinking, oh, okay, well, I heard about crypto back in 2018, and I heard about Bitcoin, and then it went from 20K down, and then I never heard about it again. Are there some things that you might want to share to the audience? Be like, hey, by the way, crypto's still around, Bitcoin's still around, and here's some cool things to hear about it.
Great question, but tough one, I think.
Yes.
That in some ways, over time, crypto has passed the test of Lindy's law in some ways, or it's getting there. Like the longer it stays, the longer it will stay, right? So that's definitely happening. And every time someone says crypto is dead, like Coinbase runs these ads so well. Like 2013, crypto is dead. 2016, crypto is dead. 2019, crypto is dead. Here we are, right? And so the longer it stays, the longer the possibility of it lasting. And now we're starting to see proof of that on a day-to-day basis.
We're going through something absolutely historic.
Technologies across the board are growing exponentially.
It's a disruption that's going to completely redefine the way businesses compete.
In the next decade, we're going to lose 40% of today's Fortune 500 companies.
The exponential growth of computing is continuing.
AI is nowhere near its full potential.
Whether you like it or not, that the future cannot be stopped by anyone.
Hi there, everybody. This is Mark Verbenkoff, and welcome back to the Future Tech and Foresight podcast. This is episode number 164, and today we are going to be revisiting one of my favorite podcast themes, which is, of course, the world of cryptocurrency, Bitcoin, etc. As somebody who's going to be moving to El Salvador in early 2025, I think that it's incumbent upon me to have a couple more Bitcoin and crypto-focused episodes over the months and certainly years to come. So I'm more than happy to reintroduce or to re-talk about the crypto world on this episode today. I think that the podcast has focused a lot on generative artificial intelligence and AI quite a bit over the last 6 to 8 months, obviously, because that's where a lot of the attention and focus and interest has been. But I think quietly in the shadows, if you will, the crypto world is chugging along. So it's great to have somebody on to the podcast today to talk about, we talk about a number of things within the crypto ecosystem, but one of the things that you'll hear right at the beginning is actually like, what are some of the interesting advancements that have happened in crypto over the last few years? Obviously the volatility of Bitcoin and cryptocurrencies is just always there in the background whenever we're talking about this theme, this topic. But I think that is a bit of a distraction compared to what is actually going on, like the businesses that are being built, the tools and the systems that are being built out as well are also very interesting, and we definitely go into those today. We also talk about some of the issues and the problems that are plaguing the crypto world. And, obviously, my guest and his company today are providing solutions to some of those problems, which are great to hear about further on in the episode. And then, as I love to talk about the future, we also touch on potentially what the future of the cryptocurrency ecosystem will look like over the next couple of years. Not as a total, revolutionary, future vision, but certainly like what are some more of the practical trends that my guest sees, and how certain things within the crypto ecosystem will likely come about. So I think it's a very interesting episode. As usual, I try to only bring on interesting guests. But for me, it was kind of a nice refresher to talk about the cryptocurrency world once again. So my guest today is Arjun Mukherjee. Hopefully I'm not butchering your last name there, Arjun. And he is the Chief Technology Officer at Mesh. He brings a wealth of experience in engineering leadership, electronic trading, and payments. His career spans notable positions at leading firms such as Coinbase, where he led payments and exchange engineering teams, and Goldman Sachs, where he played key roles in electronic trading systems and compliance. Arjun is also an angel investor and actively advises fintech and Web3 startups, sharing his insights on technical architecture, organizational design, product thinking, hiring, and retention. So needless to say, Arjun is very knowledgeable, especially in the crypto world. I really enjoyed the conversation, and I hope that the insights that he shared with me are valuable to all of you, as I'm sure most of the people listening to this podcast are also thinking and constantly revising their perspective on the cryptocurrency world or ecosystem. Arjun, I think, does a great job in sharing some insights as to what's happening and what will happen. So hopefully you enjoyed the conversation as much as I did and get some actual value from these conversations, which is one of the goals of this podcast itself. So again, thanks for listening.
Great. Well, hi there, Arjun. Thank you very much for coming onto the podcast today to talk about, I think, one of my favorite topics, which is the world of crypto, the problems, the solutions, and the future of it, and of course, what you're involved in this fascinating ecosystem. It's great to have you on, and looking forward to our chat.
Thank you so much, Mark. It's a pleasure to be here. I've been following your podcast and listening to your guests. You bring on some incredible guests.
Yeah.
I'm really humbled and honored to be here and looking forward to talking all things crypto and maybe a lot more.
Awesome. Yeah, very, very much looking forward to it. So we didn't talk about this in the little preamble that we had, but I've been involved, well, maybe not involved, but certainly following the whole crypto ecosystem since late 2017, 2018, during that big bubble, that big hype wave that got, I think, most of the world became aware of crypto anyways. And there have been, of course, a couple other downtrends and uptrends that have, grown the interest and the awareness of crypto. But what was there something that brought you into the world personally, or was it just like, oh, I can get rich, like so many other people, and then you get fascinated by the technology and it ropes you in?
So my entry into crypto was very serendipitous, which is I used to live in New York, and in New York, our rent our electricity was included in the rent.
Okay.
I think you might guess where this is going.
Mm-hmm.
So the electricity was included in the rent. So no matter how much you used, you paid a flat rent on a monthly basis. And so very coincidentally, I listened to a podcast just like yours, like about future tech. And that podcast host was, had a podcast about Bitcoin, just purely Bitcoin, right? Like crypto wasn't more than Bitcoin at that point in time.
Sure.
And that I'm talking about like 2013, end of 2013, like early 2014. And I found it very interesting, right? I really did not know what crypto was. I did not know what Bitcoin was. And this one podcast got me very intrigued. And I didn't really know what to make of it, but got me intrigued. So I did some very quick Google research. Like one thing led to another, learned about some Merkle trees, learned about the encryption that goes behind it, got very, very interesting really fast. And then I realized that, well, how about I learn a little bit more by trying to mine crypto, mine Bitcoin myself. And that's when I went to eBay, bought some previous generation ASIC miners. Remember, like I'm doing this as an experiment just to earn and not really looking to make money out of it, just to how do I plug things in, right? And so I bought a few previous generation ASICs. And if you don't know what an ASIC is, if your audience doesn't know what an ASIC is, it's a very application-specific integration circuit that's built specifically for the math that goes behind mining Bitcoin, right? So I bought like 1, followed by 2, followed by 3, followed by 5 ASICs, and like each was like $60. And the most expensive part of that was my power supply, right? Like the power box itself, not the electricity. And then I really just plugged them all together. 2013, 2014. New York gets very cold in the winters, so it was a great source of heat.
Perfect.
That's how I kind of got into crypto. Right? I started mining Bitcoin. So I have some Bitcoin from 2013, and that time there weren't really wallets, or I guess the word wasn't as popular, or like there weren't centralized exchanges that were as popular, except for the famed Mt. Gox. I ended up downloading some code and compiling it myself, and then running my own Bitcoin wallet. And that stayed on my computer, on my MacBook for 9 years.
Wow, impressive.
Luckily, and
Yeah.
the first 4 years, I didn't really know. I didn't really care. It kept building, because I would mine as part of a pool, right? Even in 2013, 2014, that hash rate was really high. And so as an individual miner, it wouldn't really make sense unless you were putting thousands of dollars into your equipment. So I was mining as a part of a pool. I just did its thing, right? So like every 6 months, I would go back like, oh, cool, this looks nice. That's $125 made. Right. And anyway, so I started mining. I got more and more curious about it. I compiled the wallet that lived on my MacBook, and I got more curious about it. And that led me to people who shared the same interests. I met more and more folks from the community. That led me to kind of pivoting my career. I was already in fintech. So, I worked for a big bank in electronic trading, but kind of had led me pivot my career into making crypto the focus of what I do into the next phase of my life. And that brought me here, that got me interested. And, soon I started, a lot of people get into it because they see the value that it provides to the community. I won't lie, I didn't, that's not how I started, right? I started out of just pure curiosity.
Sure.
And after, I was happy paying the $30 wire fees, right? I wasn't happy, but I was blissfully paying it.
Yeah.
And I was like, okay, it takes 4 days. I guess it takes 4 days. If I'm sending money to my mother in India and it's cost me $40 plus the spread, and 5 days later it probably shows up, I guess that's the world, right? So I kind of accepted it, for better or for worse, until everything that I learned through crypto showed me a better way, a different, that you don't have to accept what you've been taught. You don't have to accept the status quo. And that led to the next unlock, right? That led to me seeing the value. That led to me seeing the actual difference that crypto makes to the lives of day-to-day people. Living in America, I might not have felt it on a day-to-day basis, right? The $30 wire fee, I did not like it at all, but I paid it, and it's not like I missed a meal because of it, right? But there are folks throughout the world who might not be able to afford that luxury, and I started seeing that in the next unlock.
Right.
Sorry, long answer to your question, but
No, it's totally fine. I guess the only logical follow-up from that is, did you ever get shut down from using so much electricity in your New York apartment?
I did get shut down, but I didn't get shut down by my landlord. I got shut down by my wife.
Okay.
Because she read the one article on the internet that said mining rigs can lead to cancer, which if you comb the internet, you can, podcast can lead to cancer. I'm sure you can find
Sure.
this article. So and that point in time, it was a fun experiment, so I didn't put up much of a fight.
Right.
Yeah, I'll shut it down.
Right. Okay. Yeah, but it also seems like you went down, the crypto rabbit hole, right? It sucks you in. It sucks all of us in one way or another, and then we all become interested in the kind of vast possibilities that crypto and Bitcoin can offer. I think you said it correctly. Like, people outside of America, or I'm here in Canada. I've heard it said many times that crypto and Bitcoin is not necessarily useful or as useful for the Western world as it is for the developing world. And I don't know if we want to go down that rabbit hole, down that tangent in today's episode, but there's certainly a lot of benefits that this fascinating technology can bring to the world. One question that I did have for you, though, because you've been involved in it for 5 years more than I have, and you're obviously much more involved in it than I am. But let's say over the last 5 years or so, have there been any pretty substantial changes or evolutions in the crypto world that have that you've been able to see more clearly than others? Like, is there something that I'm also asking for, the audience who may be thinking, oh, okay, well, I heard about crypto back in 2018, and I heard about Bitcoin, and then it went from 20K down, and then I never heard about it again. Are there some things that you might want to share to the audience? Be like, hey, by the way, crypto's still around, Bitcoin's still around, and here's some cool things to hear about it.
Yeah. Great question, but tough one, I think.
Yes.
There's so much, yet there's so little. What I mean by that is, that in some ways, over time, crypto has passed the test of Lindy's law in some ways, right? Or it's getting there. Like the longer it stays, the longer it will stay, right? So that's definitely happening. And every time someone says crypto is dead, like Coinbase runs these ads so well. Like 2013, crypto is dead. 2016, crypto is dead. 2019, crypto is dead. Here we are, right? So, and so the longer it stays, the longer the possibility of it lasting. And now we're starting to see proof of that on a day-to-day basis. Also, I know a lot of focus is on, the Bitcoin price and the Ethereum price and the market cap, but I truly believe that the focus is starting to move away from it, right? We are talking about the price, yes, because I think it's a lot to do with the ETFs that have launched, but within the community, the price going up or the price going down is kind of just another day, right? And I really enjoy that, right? Like before it was like, holy crap, it's 10K today. Yeah. Whoa, it's 20K, down to 3K. There are no remarkable events anymore, right? Like it's 70K, great, it's 70. At 40K, great, it's 40K, right? The emphasis on price being the value that crypto brings, or like, Bitcoin is only useful if it's 70,000 or higher, that's down significantly on a day-to-day basis, right? Also, I think a lot of it in the recent past, just talking things that are mostly top of mind for me is a lot of institutional money has started flowing into crypto. There's a lot of good and not so good out of it. But one thing that I do believe it'll lead to is it'll lead to regulation, right? And regulation, that can happen in many different ways. But I believe that if regulation is done right, it'll happen in a way to actually protect the end user, to protect you, protect me, protect our communities. Because generally, I do think regulation generally starts the right way, but devolves over 10, 15 years. And so crypto has some elements that are very foundational. Like inclusion is foundational, identity is a little bit of foundational, or difficult but foundational, right? So I do think regulation, there's more chance of regulation being done right in a way that will actually protect end users. So that's another thing that I'm looking forward to. Over the last few years, there's been a lot of emphasis on usability. Right? 2013, like I was saying, right, when I was mining my Bitcoin, where do I put it? I had to actually download the code, compile the code, run my Bitcoin wallet on my local MacBook Pro, and that was my experience in holding Bitcoin, right? It's supposed to be easier than holding gold. That did not feel easier than holding gold. Right? It's very difficult. So today, we're very, very far from that experience, right? Like if I wanted to hold Bitcoin, I could figure out between you and me, you could send me Bitcoin within the next few minutes, like starting from scratch. Right? I do think usability has gotten significant emphasis on usability, emphasis on seamlessness has gotten significantly higher. With that also, like over time, as things evolve, complexity gets added to the system, and that's just normal, right? Like evolution leads to complexity, and complexity leads to the next solution. And right now, we are in a state of crypto where we've added a lot of complexity to get around some of the previous issues around scalability, cost, right? A lot of these networks would not scale as well. A lot of the networks were very difficult or very expensive to use, like Ethereum is very expensive to use. It's very slow. It does not scale as well. So the L2s or networks that were built on top of Ethereum came about. However, now you have an asset, right? Let's say it's a stablecoin that can be on 5 different networks. And as a user, you're like, is this on network 1 or network 2 or network 3? Or, if you want to get specific, is like USDC on Polygon or USDC on Optimism. And you should not have to subject your users to all this math that they're having to, like, all this cognitive load. Now, that's also where, like, I think Mesh does a really good job, like the products that we build, because our main emphasis on, like, taking all that load away from the end user. Like, as an end user, you want to send your asset somewhere.
Yeah.
As an end user, you want to participate in the economy, participate in the crypto economy, and you do not want to have to think about what network is this, what asset is this, like what the address is, will it get there, will it not get there? Like, you shouldn't have to worry about those things. And that's why we build the kind of products we build. That's also the direction that I think will lead to the adoption of the next billion users of crypto. Well, again, another long answer.
Yeah, no, it's great. It's great. I think those are 2 points that I've been thinking about quite a bit as well. Whenever I think about crypto and the I don't know if evolution's the right word, maybe maturing, or the maturity of the ecosystem of the industry. Right, like I remember in late 2017, 2018, like trying to understand wallets and probably buying way too many shit coins and getting confused with all that and getting burned a couple times and thinking, well, this is cool technology, but it's going to take 5-10 years before it becomes mature enough for somebody who's not tech focused to be able to use it. Because trying to understand wallets or remittance or transferring funds from one, like from an exchange to your own personal wallet, or like paper wallet, like what is that, like all these things were probably too complicated for the average person. But if we're now moving into, as you say, this more usable era, if you want to use that term, I think it's something to get excited about, and the move away from the financial focus, I think, is also really, really interesting. As a quick aside, I mentioned right before, so I'm going back to El Salvador in about 2 weeks, and it was I'm up here in Canada. The Visa cards and the bank cards really easy to use out here. But down in El Salvador, specifically in like 1 or 2 places, I was just using Bitcoin all the time to do all my payments, to receive funds. It was very, very simple, and they had very easy apps to use. And I was hesitant going down there, even as a fan of crypto and the technology. I was like, because I remembered those difficult times of sending Bitcoin, having to wait half an hour, freaking out whether the crypto or the Bitcoin would actually arrive or anything. But it seems to be that the evolution of the entire ecosystem with companies like yours are really making it a lot more user friendly. So looking forward to getting into a little bit more. Okay, a question for you. So we already talked about like usability as one of kind of the main problems of the crypto space. You also alluded to maybe some bad actors indirectly in what the last response that you had. Are there any other kind of like main problems of the ecosystem that or challenges that we should touch on, or that you should touch on, or are those points kind of the main ones that we should be thinking about?
Yeah, no, there are a few more, and some of those are crypto. If you look at crypto, there are lots of protocols, lots of L1 chains, lots of L2 chains, and chains built on top of each other, chains competing with each other, chains complementary of each other. But one of the things that we're still looking for, or as developers are still looking for, developers within that, because for crypto to do well, you need to provide value to the end user. To provide value, you need to build that value. And who builds value? Developers build value, right? Builders build value. Right? So for the builders and developers, what do they want to do? They want to build value. They don't want to reinvent the wheel, right? So that's been happening a lot over the last 10 years. Like, everyone is reinventing payments because they're doing it in a new chain. Everyone is reinventing identity because they're doing it in a new place, because it's not primitive it's not a Web3 primitive yet, right? Everyone is reinventing data availability. How do I get access to the data, right? Like, that's a very, that's a solved problem in the Web2 world. Like, there are many patterns, architectural patterns, But in Web3, it really isn't. It's actually a very difficult problem. Like, how do I just get access to all the transactions that I've done on my wallet? It's a very difficult problem, as simple as that question is, right? So some of these primitives need to become Web3 primitives, right? Like, developers shouldn't have to worry about these, right? Like, when I'm trying to build my next app, my next Web3 app, I should just be able to say, payments done. Someone's done it for me, right? And someone's done it in a reliable, secure manner, right? Deposits, withdrawals, done. Someone's done it for me. Someone's done it in a reliable, secure manner. So I can do what I do well is build differentiated value, right? So that is starting to happen, but that's also, I'll use your phrase, that's also important for that next era, right? For us to usher in the next billion users, we'll have to cater to the developers or the builders, and the builders want to build value, not reinvent the wheel. And that's starting to happen more and more and more now in the recent past.
Okay. And is that where Mesh fits in as well with this? Yeah.
Yeah. Sorry to interrupt. Yeah, very much exactly where Mesh fits in, because we're trying to be the connectivity layer for crypto. Right, so whether you have centralized exchanges like Coinbase, Binance, Robinhood is not really an exchange, a brokerage, let's say, or you have self-custodial wallets like MetaMask, Coinbase Wallet, they're all sources of liquidity. They're all sources of where crypto can exist. And so we are positioning ourselves as the connectivity layer for crypto. So as an end user, as a builder, as a developer, you shouldn't have to worry about, how do I get my crypto from point A to point B? How do I get my crypto securely and seamlessly from point A to point B? That's where someone like Mesh comes in. Those are the kind of products we build, right? So they're also, like, another way to think about this is, if you get access to your liquidity, your crypto in a seamless, easy, secure way, you can also participate, use it better, use it in a more efficient way. Right? It's like, the next time I go to, Polymarket's blowing up now. I don't know if you've heard about Polymarket, but they're because of the elections, and they're starting to absolutely take off. But the next time I go to participate in the crypto ecosystem, I hesitate a bit because it's going to take me like 5 minutes before I can start. Right? And then I want to remove that friction. We at Mesh remove that friction. That those 5 minutes are not just 5 minutes that the user has to put in, it's also 5 minutes of active engagement, active cognitive engagement, and fear, risk, and doubt. Like, do I have to do this? What happens if I click on that signature? What happens if, I even don't understand this cryptic message? So we remove all of that, right? We're truly making privilege, like, forget about the movement of assets. Forget about, is this seamless? Is this secure? Like, you can count on us for that. We will connect you to where your crypto lies so you can use it where you want to use it. Right? So those are the kind of products that Mesh is trying to build.
One of the questions I like to ask my guests is an example, right, to make it a little bit more tangible, in case people are like, they understand the abstract idea, but I think it's always better for a tangible example to solidify the idea.
Yeah, absolutely. So let's think about a sneaker store in Estonia, right? I'm choosing Estonia very randomly, nothing to do with the country, right? They're just very crypto friendly and very like fintech forward. But let's think about a sneaker store in Estonia, and they want to accept payments in crypto, right? So you can give them your Ethereum, or you can give them your Bitcoin, and they will ship a sneaker to you, your sneaker, right? Now, let's say the sneaker that you're trying to buy is 5 ETH, really expensive sneaker, but let's say it's 5 ETH just for simple math. But you have, let's say, 2 ETH in your MetaMask wallet, which is a self-custody wallet, and you have 2 ETH in your Binance centralized exchange account, and you have 1 ETH in, let's say, Coinbase. Now, for you to make this happen in the world that exists today, you'd have to move everything to one place, maybe to your MetaMask. So you'd have to go to Binance. You'd have to go to first MetaMask, copy your MetaMask address, go to Binance, paste it in, send it. And then you have to do a Coinbase, do the exact same thing. And then you have to come back to MetaMask, wait for the addresses, cross your fingers, you got it all right. And hopefully 5ETH now shows up. Then you go to the sneaker store website and you connect your MetaMask wallet and then you make the payment. Versus if you were to use Mesh, you would just say pay with Mesh on the website. And in the dropdown, you'd be like, I want to choose the 2 ETHs that I have in Binance, the 1 ETH that I have in MetaMask, and the 2 I have in Binance, pay, right? And in those 3 clicks, you've automated all of these 4 different platforms at maybe 23 clicks per platform, by the way. I did the math once. That's 23 times 3. And you've condensed all of that down to a single platform. You never left the sneaker store's website. You just stayed on the website. It's embedded, right? That's another paradigm we lean a lot into, embedded banking, kind of like Plaid. Plaid was very good with embedded banking for the fiat world. Mm-hmm. And now, so we are leaning really into embedded banking and open banking as well. And so we stayed embedded. As a user, you stayed within the context of the sneaker store. You never left that. Like, you always saw the sneaker that you're buying, right? You always saw the price right in front of you, and then you were able to choose exactly how you want to pay for it, and you were able to fire that off all within, 4 clicks, right? So, does that help?
Yeah, no, that's a perfect example. I think it also highly connects to what both of us mentioned before about this maturing of the ecosystem and how, I still have nightmares trying to, remember how difficult it is to send Bitcoin from one address to another, and like really freaking out that this investment is going to just disappear into the ether, right? I guess my point here is hearing things like this and other, crypto podcast guests that have come on, it really sounds like there's this maturing of the ecosystem, which, as you said, right at the beginning, it's going to enable end users to have more trust and reliability and ease of use in this entire with this technology, which of course is going to increase the adoption rate. So I'm happy to hear that. It sounds great. I guess extrapolating from this, have you guys thought a little bit about what the impacts are for, say, different countries or for different industries? Like, you picked Estonia, but I could also assume this could be useful for like Bangladesh, or I think Bangladesh has banned crypto, but other maybe developing countries where using crypto with a platform like Mesh would be advantageous and maybe opening up markets or other kind of, I'm thinking like higher term, larger economic impacts that would happen with a product like yours.
Absolutely. I'll give you an anecdote and then I'll answer the question.
Sure.
So I worked at Coinbase for quite a few years, and the initial years of Coinbase had a giving arm called Give Crypto. And what Give Crypto did was they had boots on the ground in Venezuela, right? Because turns out Venezuelan citizens, the day they got paid their salary, what they would do is, instead of taking that money home or to the bank, they would stop off at the local electronic store and buy a TV, because that TV held more value than the boleros.
Crazy, right?
Right. But what that would mean is they had no savings for a rainy day. If they had a medical emergency, that would be very, very tough for them in the future. So Give Crypto would be boots on the ground to be like, we can help you convert your boleros right now. When on your way to that electronic store, I can help you create a wallet and convert it, and you can hold ETH. It's not the most stable, maybe compared to dollar, but much more stable than the Venezuelan boleros. And that would help people have a savings account, right? So they had a savings account that was now in ETH. Now, I start with that anecdote because we're seeing these use cases using Mesh products in LATAM, right? So all across LATAM, we're seeing folks that are trying to get exposure to the US dollar and trying to keep savings accounts that are USDC or stablecoin denominated because of this very reason, because their government, frankly, isn't very responsible with their fiscal and monetary policies. And so, people will find a way, liquidity will find a way for, to the highest yield. It's got a very liquidity by nature, it's got a very liquid nature to it. It always flows towards highest yield. So people will find a way to secure their future. And if they don't trust their government, then they'll find it in different ways, such as crypto. And right now, they're using mesh products in a lot of crypto native neobanks that are starting to erupt all over LATAM. And those...
Sorry, you said a neobank?
Yeah. Oh, sorry.
Yeah, that's a term I'm not familiar with. Do you mind clarifying that?
No, absolutely. So it's not a traditional bank; it's a neobank.
Yeah.
Right. So they're the kind of banking infrastructure that is very new rails forward. Right. So instead of not necessarily relying on old rails like wires and ACH, they're starting to rely on crypto infrastructure. They might be the ones to do like real-time payments. So it's not just neobanks don't just mean crypto. They just mean more banks that are, Mercury in the US is classified as a neobank because, you can get started with a Mercury account in like 5 minutes, right? Like if I needed a JP Morgan Chase account, I might have to go to a bank down and, those are some of the differences between a neobank and a traditional bank. So when I say a neobank in LATAM, these are banking service providers that are now starting to become very crypto friendly and crypto forward. They've probably been launched within the last 10 years, maybe even less, and they've started to get the attention of the public, Latin American public, because they're giving them what the public wants, and the public wants access to a secure financial future via some means, and those means today happens to be stablecoins. And Mesh is enabling that because Mesh is providing, now they're interfacing with the crypto ecosystem via their neobank, lots of years, because now they're able to connect their liquidity and then move it in the place that they think will provide the most value, which is their savings account here.
Right. Very, very interesting. Yeah, it's it goes back to what I said at the beginning, where I've heard many times that crypto in general is going to be used more, and it's going to be needed more in developing parts of the world, rather than Canada, America, and Europe, for instance. One hopefully quick question: what kind of challenges are or potential problems are with like more widespread adoption of crypto? I could only imagine volatility with the prices. But if you're saying stablecoins are connected to this, then that kind of takes out the volatility. So what other issues are you guys aware of?
I'll start with stablecoins really, because stablecoins so volatility is definitely one of the reasons that's preventing broader adoption. There are many reasons. And stablecoins has been a plug in that hole, right? It's a pretty big hole, right? The volatility. But the stablecoins have been, but stablecoins aren't truly like decentralized, right? So there is, you could want to put a lot into your USDC or your other stablecoins, but no, there is a centralized entity behind it. It has to be backed the US dollar, right? So, but they have plugged that hole in a significant amount, because even though it's backed by the US dollar, so many Latin American public users are getting access to that US dollar much more efficiently than they did yet. Now, the outside of the where we started this question, which is what else is so crypto traditionally has tried to solve the problem of is it decision making, right? Like, if it's my asset, should I have complete decision making or not? Right? If we look at the traditional problem around like your Canadian dollars in your Canadian bank, it is yours, 100%, right? If there is a $1 in the bank, that is $1 that belongs to Mark. But do you have complete decision making on it? Probably not, right? Because
much less in Canada than maybe in other countries.
Right. right? But same with me, like if the website goes down, as simple as my banking website going down, I lose access to it. If the ATM goes down, I lose access to it. If they freeze my account because of whatever reason, I lose access to it, right? So anyway, I start there because crypto's traditionally started on like, crypto wants to give you, the end user, complete decision making. Now that is really good, but that has led to crypto being like targeted towards like, now you have to very difficult to use cases. Like you have to remember, because you have complete decision making, if you mess up, it's your fault. If you want to make any actions with your money, with your assets, it's also your decision to make, right? But then that leads to, now I have to remember these 12, 24 words. I have to remember this, 640 character long private key, which I don't really use except for once every 12 months, and then I've lost it.
Right.
Lost it. So it started in a way which like prioritizes security, and now we are starting to see that there is this push, right? This tension between security and UX. And we started on the left side of the spectrum, which was like, I'll give you as much access as you want, as much decision-making power as you want. But that also means we have to make it as secure as possible. We sacrifice a lot of UX for it. People are starting to move a little bit to the right, right? Maybe they'll find, we as a community will find our way right in the middle, which will be better than the world we are in today with the example of the banking dollars. But it might not be as difficult as the world that was yesterday, which is 12, 24 seed phrases and whatnot. So we will find that solution, and that's the thing that will lead to the next era of adoption. So in some ways, going back to what I was saying previously, I think, which is prioritizing UX, prioritizing like the seamlessness of operations, making it more than a tech-only tool, right? Trying to bring in people from across the gamut when it comes to what industry you belong in, right? Those are the things that cryptos or the crypto industry has taken a very strong stance towards now. It's things that I care deeply about, and Mesh cares deeply about, and things that we want to build and we continue to build on a day-to-day basis.
Okay. I see that our time is winding down here a little bit, so maybe I'll shift basis a little bit before going into, which is always my last question, like the future of whatever technology we're touching on. If there are any businesses out there that are thinking about integrating crypto services or payments into their business, what advice would you give them? Like what would be like the first thing that they need to think about before they go down this interesting path?
Well, I think my first piece of advice is very nothing extraordinary here, which is don't do it because it's cool, do it because you're wanted. And there'll be a segment of the market where the users really, really want crypto payments, and there'll be a segment of the market where the users don't. And so don't subject your users to things that, don't you find a tool and then look for a solution. Right? If you find a problem, don't find a tool and then look for a problem. If you've got a problem, then look for the tool. So ask your users, do they really want crypto payments? And in that case, that's the perfect, start doing your research. Try to there is a need to do a lot of research here.
Yeah.
And everyone says that, do your own research in crypto, and that's absolutely true. But mostly people say it in terms of trading meme coins. But generally do your own research in crypto. But then also look for infrastructure providers, right? Don't try to reinvent the wheel, right? Like we were talking about before. Look for providers such as Mesh, who have built out crypto payments before. Some of the reputed companies have their own payment solutions, very closed ecosystems on the payment solutions. But then don't try to build your own. In these kind of situations, the build versus buy, the buy might be a much better ROI. So that would be my second piece of advice. And also, if you're going to go down the route of crypto payments, at today, 2024, I think it behooves you to understand crypto a little, right? So as much as it should not be required, today it is. Today we're in a world where if you did want to offer crypto solutions and your users were asking for it, but you did not understand it, you might find it a little difficult, right? Like if for instance, the users might want a specific network, right? And for you to be able to ask your users what network do you want, that becomes a difficult conversation if you're not somewhat crypto savvy. You don't have to be a savant, you don't have to be an expert, but you have to educate yourself a little bit here. Right? So those pieces of advice I think I'd start with. But reach out to Mesh. If you're looking to add payment solutions, we'd be happy to partner with you. And one of the things, like I said, we pride ourselves in just like crypto connectivity. Right? Nobody should have to worry about where my assets are. Nobody should have to reinvent the wheel. You should be able to do plug and play solutions, and that's what we're good in.
Yeah, awesome. Well, I'll definitely have the website and your LinkedIn up on the show notes. But I do want to end the podcast as I typically do, which is always my favorite questions, like what's going to happen in the next, let's say, 3 to 5 years, right? Well, obviously, there's going to be more adoption. There's going to be price volatility. But from your point of view, what are you excited about? What are you scared about or concerned about? How do you see the next 3 to 5 years or so turning into or evolving into?
I'll put my engineer's hat on because I'm an engineer. Like I've always been an engineer. And I was talking about developers earlier, right? As like for crypto to build value for the community, you need builders, you need developers. Mm-hmm. One thing we didn't talk about, and I can't take 5 steps outside my house without someone saying AI. So I'll talk about AI just for a few seconds. No, I'm not even close to an expert. But I do think the world that is going to be ushered in via AI is a world of, speaking as an engineer, today the human-computer interface is very complex, right? Like for me to tell a computer what to do, I have to be very well educated in like engineering, and I have to know how to write code and complex code. And I think AI will bridge that gap significantly. So I do think the future will look like if you can write, you can code. Yep. If you read, you can code. So coding will just be an activity anybody can do. That's the future. I'll be looking forward to more and more builders building in Web3, right? Then builders could come from anywhere. It doesn't have to be the developer ecosystem. It could be someone who was an artist, who was a painter, who was a musician. Now they're building their own NFTs, they're building their own apps, and they're doing all of this because it's just so easy to do so. Mm-hmm. And the Web3 community has built itself to include the primitives I was talking about, right? Don't have to worry about payments, it exists. Don't have to worry about identity, it exists. AI has ushered a world where everybody can code. Those two coming together is what I'm looking forward to, and I believe that's something I would love to see in the medium future.
Yeah. No, it's, this generative AI hype wave is certainly kind of an exponential multiplier in many different industries. And I'm sure we're going to see that in the crypto ecosystem as well. Maybe I'll have to have you come back on in a couple of years to describe what just happened over the last, 3 years or something like that when everything goes absolutely crazy. Arjun, thank you very much for coming on the podcast. It was very easy for me. You gave some long, well thought out answers. So thank you very much for that. As I mentioned, I'll have the Mesh website, your LinkedIn up on the show notes. Are there any other places that you want people to reach out or follow what you guys are doing?
MeshConnect.com. That's our website. And there's a lot of information out there. You can go to LinkedIn and follow us there as well, or on X. We try and publish the kind of things I talked about today. We feel very strongly about these kind of things like open banking, and we talk a lot about these. So if you're interested in any of these, your listeners, please reach out to us. We would be happy to. It's not just business. We'd be just happy to have a conversation.
Perfect. Great. Well, thank you very much for coming on the podcast. It was an absolute pleasure. Great to be able to talk about crypto once again, especially before I head off down to El Salvador. Just general thanks for coming on.
It was my pleasure. Thank you so much for having me on, Mark.
Absolutely.
All right.
Well, thanks for listening to this week's Future Tech and Foresight podcast. If you like what you've heard here, there are, of course, a number of ways that you can support the podcast. The best way would be to leave a review on Apple Podcasts or give a rating on Spotify, which you can find a step-by-step explanation for on the futuretechandforesight.com website. Alternatively, feel free to leave a comment either on the episode show notes or the YouTube channel where you can see video recordings of the interviews. And finally, if you are part of an organization that is aware of the disruptive and transformational impact that emerging and future technologies will bring and want to know more, please get in touch to hear about the strategic foresight services that we offer and how we can help future-proof your organization and take advantage of the phenomenal opportunities available to survive and thrive in the future.
A lot of future-shocked people and future-shocked institutions in our society are simply overwhelmed.
Once there is superintelligence, the fate of humanity may depend on what the superintelligence does.
Science fact is catching up to science fiction.
The first truly intelligent machine will be the last invention that humanity needs to make.
The only scarcity that will exist in the future is that which we decide to create ourselves as humans.
Within a 10-year design revolution, we can have all humanity living the highest standard of living anybody's ever known.
Progress is accelerating at an exponential pace, and it's going to reach a point where progress is so fast it's going to be a singularity.
We are probably one of the last generations of Homo sapiens.
Every single headline points to the birth pangs of a Type 1 civilization.